Hello and welcome to another Mr. James accounting tutorial. Today we'll be looking at accounting unit 2, paper 2 of 2022, module 1. So let's get right into it. Part A, define cost accounting in relation to the following criteria: purpose, scope, procedures and practices, for 3 marks. Okay, so it's only 3 marks, so this should not have been a very long answer. We want to just focus on the purpose, the scope and the procedures and practices. The purpose: cost accounting helps management identify, accumulate and better control their costs so they can make informed pricing decisions. Look at the scope. Cost accounting information are provided for use by a company's internal management team, and so the collection methods can be customized according to each company's needs. The procedures and practices. Cost accounting procedures and practice involve accumulating, recording, calculating, analyzing, assessing the overall expenses incurred on a product, process, or service. The actual activities used by the business are based on cost-benefit analysis, and it's very flexible. You can use whatever technique you want to use. Part B. The Clarendon Candle Company manufactures a range of candles. Information regarding one of its most popular line of candles is provided in the following table. We are given a table here: the quantity, total fixed cost, total variable cost, total cost, average fixed cost, average variable cost, and average total cost. Let's see what is required. First, they require us to insert the correct data into each of the spaces labeled E to L in the answer booklet. Now E to L is 12 items. For 6 marks, that's half a mark. The question. Okay, now if we look at the table itself, we notice we have the quantity in one column, and then these 3 are related, and the other 3 is also related. The total fixed cost and the total variable cost is equal to the total cost, and the other one is based on a similar formula. Average fixed cost plus average variable cost equals average total cost. So we'll be utilizing that formula to find out how much to put in the missing cells, and let's start right away. The average total fixed cost is 600, total cost is 800, so the difference in here should be 200. That would be our total variable cost, so we put 200 in there. We go to B. The total fixed cost 600, total cost 1950. 1950 minus 600 gives us 1350. We go over to the other side, and here the average fixed cost is 60. Part C, The average fixed cost would be the 600 divided by the 20 units, and we will get 30. Then D, the average fixed cost again, we will use the same formula, the 600 divided by 30 this time, and we will get 20. And E, the average is 600 divided by 40, and we'll get 15. We go on to F, the average variable cost, 200 we just calculated, divided by 10, and we will get 20. G, an average variable cost of 300 divided by 20, we'll get 15. And then H, 800 divided by 40, we'll get 20. And I would be 1350 divided by 50, and we will get 27. J would be 809. We just add these two, or we could divide it here, 800, sorry. 60 and 20 will give us 80. And K, 20 and 15 will give us 35, and L, 15 and 20 will give us 35. Continue with part B. On the grid provided in your answer booklet, sketch a graph of each of the following curves using the information calculated in B. Use the same axis for all three curves, and we are asked just for the curves on this side here. Average fixed cost, average variable cost, and average total cost. So on one axis you would have quantity, and on the other axis you would have these costs. And part 3, outline one reason for the shape of each of the curves in B, I, 6 marks. Okay, let's take a look at what the answer should look like. In order to answer this question, you have to know how to draw graphs in maths. Essentially, this is a maths problem, not really a POE problem, right? This graph actually starts from here. I drew it by putting the figures into Excel and then just clicking chart. But you should be able to plot these points, each one of the points from the thing, from your table. 10, the cost was 20. Okay, the blue line is AFC, average fixed cost. So for the average fixed cost, it was 60, and for the average variable cost, 10 units was 20. So that's how we plot it. We get the figures from off the table, and we plot the graph, quantity this way, the cost this way. What we'll look at next is the shape of the curve. With the fixed cost, the blue one, is a downward shaping curve. It will continue to go downwards as the quantity increases. Okay, and the reason for that is because you're taking a fixed number, 600, and then you're dividing it by a bigger number all the time going, right? So you get a downward sloping curve. So as the number of units increase, you would find that the fixed cost per unit would be decreasing. That accounts for the shape of the curve. The average variable cost is this one here, and if we notice it more U-shape. What happens is the average cost falls at first and then begin to rise as the number of units increase. So you get a more U-shaped curve. Okay, the average total cost is a combination of the fixed cost and the variable cost. When you add these two together, you get this one. Okay, for instance, here, if you take the 20 and you add it to the 60, you will get 80 up here. So this curve would be a combination of the fixed cost and the variable cost. It would slope downwards at first while the fixed cost is greater than the variable cost, and then when the variable cost becomes greater, it will begin to slope the other way. So you'll get a flatter U shape than the variable cost, but the cost should take the curve should take the same pattern more or less after a while. Let's move on to the next slide and see why the reasons for the shape of the curve. The average fixed cost curve, the curve is downward sloping because the fixed cost per unit decreases as the quantity of units increases. Then we have the average variable cost. The curve is approximately U-shaped because the average decreases at first and then begins to increase. Total average cost, the curve is a flatter U than the ABC because it is the total of the other two. When the average fixed cost is greater than the average variable cost, it's downward sloping. And when that changes and the average variable cost becomes greater than the average fixed cost, it changes to an upward sloping, and that's why you get the U shape. Okay, let's move on to the next part of the question. The following information should be used in answering part C and D. I looked for the part D and I didn't find any part D on my paper. I don't know if you have a part D on your paper. You could probably send it to me. However, the total marks for up to part C amounts to the 35 marks that is normally for module 1. Okay, so we are given these data here. Georgetown Oil Services Limited has 2 production departments, manufacturing and assembly, and 2 service departments, maintenance and recreational. The following are budgeted costs for the total period, and we are given a table here with the costs for the period. Then we are given some additional information for the different departments, like the area, kilowatt hours consumed, machine value, number of staff, direct labor hours, indirect labor. Okay, now let's see what they will have us do with this data. Required, determine the basis on which the following categories of costs will be allocated, and using the appropriate allocation overhead base, complete the table provided in the answer booklet by inserting the missing information in the spaces labeled 1 to 20. That is these spaces here. Now I didn't have a table on the paper, so I prepared one, and this is what you should have look like. Okay, notice at the top, available overhead, basis of apportionment, manufacture, assembly, maintenance, recreation, and the total. This column is not really necessary, but you can keep it in there as a control so you know when you have balance. So the basis of apportionment taken, um, this is part of your answer. Rent, I took square meters. There must be some relation between the overhead and the basis of apportionment. Rent is normally, you pay more rent the greater the size of your department. Electricity, kilowatt hours consumed. Machine depreciation, machine value. Direct labor, indirect labor, the indirect labor dollars. Now, if you look at the table carefully, you would notice that this one was already done for you. And because the amount here, all four columns are already filled out. Okay, so what will happen in this table, we will fill in these figures here, doing the workings first, and then we'll add them down this way, and we get a total here. When we add our total across, it should equal this, and we know that it is correct then. Okay, so right, first we'll do the workings, and if you notice here we take the rent first, and we'll work out the amount for each one of the departments here. To do that, we'll take the 75,000 from the table overhead, and here we'll multiply the 7,500 by 4,000 over 7,500. Okay, so 4,000 over 7,500 by 75 to 40,000. Again, we have take assembly next, which will be 2,000 over the 7,500 here, and we multiply by the total overhead for rent, and that will give us 20,000. We do the same with maintenance. You take 1,000 over 7,500, and we multiply by 75,000, and we get 10,000. Recreation, 500 over 75,000, 7,500 multiplied 75,000 equal 5,000. When we finish with that, we take these figures in the end here and we fill it into our table. Then we move to the next item and we do our workings again. For electricity this time. Electricity, we have decided on kilowatt hours consumed because that is related to electricity. We do the same thing again. We have 10,000 and electricity overhead is 20,000. So we take the 5,400 divided by 10,000 multiplied by 20,000 overhead. We get 10,800 for manufacturing. Do the same for assembly, maintenance, recreational, and we get these four figures. We put them in our table again, and we move on to the next item, which is the machine depreciation. We go through these four assemblies again. This time Machine depreciation has a total of $110,000 and the overhead is 16,500. So we put each one of these over 110,000 and multiply it by 16.5 and we get the proportion that goes into that department. Okay, then we take these figures and we put it into the table that we had prepared. Now, let's take a look at what our table would look like after we are finished. So we have it here. When we fill in all the figures that we have calculated, it would look like that. And like I said, this one added across should give us the same amount as this one added coming down here. That is how accountants know their amounts are correct and balanced. Okay, now what you should do is check back these figures and see that I brought them across correctly from the workings, and I have the same thing here that we have on the data given. Okay, so that brings us to the end of this module, and I hope you find it beneficial at this time. If you have not yet subscribed to the channel, you can please do so, and remember to look at any advertisement that would be on this video, because that is how this channel will get itself financed, so you can have videos like this for free. Okay, see you in the next video.